Hey guys, in this video, I will teach you a very simple method on how you can find your monthly, weekly, and daily bias. This has to be the easiest way, and it literally requires you to only look at your charts for, 5 to 10 minutes, and then you would know that where the market is going to go to the next day, the next week, or the next month. Before we start, we will have to talk about external liquidity and an internal liquidity. Let me draw this out. Any high or low is considered to be an external liquidity. This right here is going to be external liquidity. Okay, and this right here is also external liquidity. Now, what is an internal liquidity? It is basically a fair value gap in the discount or premium. Okay, so let's say if price takes out this external liquidity, which is this high. You mark out the fair value gap in the discount zone. So how do you find your discount zone? You draw your fib from the bottom to top, and anything below the 0.5 level is considered to be in a discounted zone. Okay, so price does only two things. It either takes our external liquidity and goes back and seek the internal liquidity, or it goes to internal liquidity and seeks external liquidity. So in this for example, you can see price took out the external liquidity, which is this high over here. And afterwards, after looking at the lower time frames, and I'm going to teach you how, you then determine that price is going to go down. So the next target, if that pattern happens on a smaller time frame, then you can anticipate and say that price is going to now go for the internal liquidity, which is going to be this fair value gap. So this right here is internal liquidity FVG. Very simple, and similarly, you can see that if we have something like this and this. So price takes out this high over here, and we mark out our fib from bottom to top. Where is the fair value gap? The recent fair value gap below the 0.5 level, it is going to be this. So now, after looking at the lower time frame, we can anticipate that, okay, price is going to on this fair value gap. If the fair value gap is partially filled, let's say price goes up, there was a fair value gap, price touches, and then goes back to external, then that fair value gap is no longer valid. That internal liquidity is already taken. So we simply just went from internal to external. This is how you determine your daily bias or weekly or monthly. So what do we look for on a smaller time from that? Now, that is the main question. So I'm going to start with the monthly time frame. So how you can determine your monthly bias. So let's say on the monthly, price goes ahead and takes out external liquidity around here. And you see a fair value gap, which is the internal liquidity in a discount zone. Now, watch this very carefully. When you're looking at the monthly, when price takes out external liquidity, right? And you have internal liquidity in the discount, for this example, of course. When you're looking at monthly, okay? You drop down to daily time frame. So when you have extended liquidity taken out on a monthly time frame, what you want to do for is now you have to drop down to daily time frame. Daily time frame, remember? And simply, you look for a clean market structure shift. So let's say there is a low here on a daily time frame. We took out the monthly extended liquidity. We have the monthly fair value gap, which is the internal liquidity. You wait for price to take out, do a market structure shift on a daily time frame. Once that happens, once the body closes below this low, once you have a market structure shift, that is your go-to sign that my monthly bias is now going to be bearish until this level is filled. So once that market structure shift happens, you can simply look for my patterns. So basically you have my ABC pattern, you can simply look for that. You can use the 8:30 AM strategy that I've already taught on this YouTube channel. You can literally use anything. That is going to be your bias. If you want to learn about my strategies, there are tons of videos on this channel. But right now I'm only talking about bias. So once you have a market structure shift on a daily time frame, that is your sign. Okay, we are only going to take short positions until this fair value gap gets filled. I hope that is clear. Let's move on to the weekly bias. How do you determine a weekly bias? So let's say if this is the external liquidity taken out on a weekly time frame, and this right here is internal liquidity. So after the price takes out the external liquidity on a weekly time frame, and you have a fair value gap, which is your internal liquidity in a premium. So you determine your premium discount zone by drawing the fair from the high to the low, and if it's the fair value gap is above the 0.5 level, that is a valid liquidity level. So now once you are on the weekly time frame, you look for market structure shift on 4-hour time frame. Okay. So once you get a market structure shift, there's going to be a high around here, right? When price takes out external on the weekly time frame, you drop down to the 4-hour time frame and look for a clear structure. And what happens? Price takes out that structure. The body closes a must. Then after that, you just simply look for price to take out sell side liquidity, right? So let's say you have a market structure shift. I can give you a simple model. Price creates a liquidity sell side. Price takes out the sell side, goes up. Price takes out sell side again, goes up. Price takes out sell side again, goes up, until this level is hit. Now, here's the thing. From external to internal has a higher chance. So if you are going from external, so let's say this price takes out the external liquidity, then price has a higher chance going into that fair value gap. However, when we are going from internal to external, that requires a very strong bias. So I highly recommend you go from external to internal, but internal to external works as well. I would just say it has a low strike rate. Your bias could be wrong a bit more if you are going from internal to external. So let's say a price comes into your frame of the gap and you anticipated that this external is going to it's going to be taken out. There's a little chance that you might be wrong. But this has high probability, external to internal. So you can see we look for a market structure shift on a 4-hour time frame when we are looking at the weekly bias, and after onwards, we can look for any of my trading strategies, tons of videos. As I said before, this is only for finding out your bias. And of course, I'm going to give you a couple of examples as well. So don't worry. Now, the main part of the video, how do you determine your daily bias? So simply, we will look for the same pattern. So we have external liquidity taken out, a fair value gap in the premium. The one you are on a daily time frame, you simply want to drop down to 1-hour time frame. Simple as that. You simply look for a market structure shift. After price takes out external liquidity, you simply look for a market structure shift on 1-hour time frame. And after that, you can look for patterns that look something like this. Sell side taken, boom. Sell side taken, boom. Sell side taken, and vice versa. So that is it. I'm going to give you guys a couple of examples, and then I'll end the video. Alright guys. So here is example number 1. I'm looking at Australian dollar to US dollar on a monthly time frame, and I'm going to go from monthly to daily with examples. So as you can see, right here, what do we have? We have external liquidity. So this is a high, a clear high. And below here, we have a fair value gap, FVG, right around here. And if you use the fib tool from the bottom to top, you can see that it is below the 0.5 level. So as soon as this liquidity is taken out, external liquidity is taken out, we simply drop down to the daily time frame. Remember, on the monthly, we go from monthly to daily. Okay, so now we are simply looking for a clean market structure shift. Right here, what you can see, we have this low created and price broke through this level. And as you can see, price here onwards, we have a fair value gap, right? And this is our draw on liquidity. And let's see what happens. So your monthly bias was since bearish, you could have only taken sell positions. Very simple, guys. So you can see there was fair value gap. You could have looked for a setup here on the lower time frame. I'm not going to teach you right now because, of course, this is a video about your bias. You can watch a lot, again, I'll say it again, because I know there might be some people would say, you're not teaching how to enter and exit. There are tons of strategies. You can apply the same patterns once you have your bias. So if you have your bearish bias, you can look for the patterns that tell you to go short. Simple as that. And as you can see, price takes out the liquidity, and right away, we have a clean momentum to the upside. So as you can see, we had a clean shift in market structure right here, and here on then we seek this, it's a fair value gap on a monthly time frame. If you go to the monthly, you can see it looks something like that. Alright guys. Here is an example for the weekly bias. As you can see, we have a purge on the external liquidity right here, which is a high. Where do we see the fair value gap? This right here. So in this example, I would draw my fib from the range low to the range high. And you can see it is below the 0.5 level. So we are good to go. Now, from here on was what you simply want to do when we're looking at the weekly. We're simply going to drop down to the 4-hour time frame and look for a market structure shift. Right away, what do we have? We have a shift in the market structure. And from here onwards, your draw on liquidity is going to be this. And so your bias is now set to be bearish for, I don't know, for a week or until this level is taken out. So let's go back the weekly time frame right here. And if I play this through, you can see that we hit our draw on liquidity right here. So this is very powerful. Okay, you don't understand this. When you're going to use this with the trading strategies that I've taught you on this YouTube channel, bro, trust me, your win rate is going to just skyrocket. Anyways, I hope you guys enjoyed today's video, and I'll see you guys on the next Sunday. So basically, the schedule is set. I'm going to upload every single Sunday, so expect more quality videos. I'll see you guys in the next one. Goodbye. Thanks for watching our video.